had a fantastic opening session this morning with keynote addresses from Sir David Wotton, Lord Mayor, City of London, 2012, Lord Sheikh, who gave a special address and enlightened us with his work and his spirit in Islamic finance. And we had Omar Sheikh, who's doing fantastic work through the IFC and with governments and Sharia scholars and other bodies. He spoke about the enabling regulatory framework for Islamic finance and the 7 principles which stood out for me. The next session, and you can probably see in the program, we have an order of the next session. We will be reversing that order, and I'm not saying this is the order of importance, but I would like to now introduce a very good friend, Richard de Belder, who is a lawyer and partner at Dentons. Dentons is formerly known as Dentons while Sapt and has had many iterations, but he is the global head of Islamic finance, former member of the UK task force, has been involved in all kinds of Islamic finance work at the UK government level, at the international level. He's been involved in the Middle East, chairing and managing as a managing partner for the Dentons when it used to be called Wild Sapt, and many other things. I see you can read his profile, detailed profile in the program. Richard will speak to us about, it says here in the program, the case study on UK being the first non-Muslim sovereign issue of Islamic bonds, but I think he will speak widely and highlight other issues which are prevalent and important to Islamic finance. So I'd like to invite Richard de Belder. Thank you.
Thanks very much, Bilal, for that introduction. As Bilal said, I'm going to be talking about the UK sovereign sukuk, but in a more wider context, bearing in mind that this conference is aimed at the EU in general. Clearly there's been a big shift in the last few months in terms of non-Muslim countries issuing sovereign sukuk. And it clearly does herald a change in the mindset of many of these types of governments. Now, the UK's commitment to Islamic finance has been going on for many years, and I view the UK sovereign sukuk as really being one part of this overall, as I said, journey and the title to my presentation. It's really just a continuation of these various initiatives that both the previous government and the coalition government have taken. And I'll also touch upon where we were looking at things last year when I was a member of the UK Islamic Finance Task Force. The constant theme, which I think probably other speakers have already mentioned, I didn't hear Omar's speech, unfortunately, but on the regulatory side and the tax side, the idea is to create a level playing field. So for those of you who come from other EU countries that haven't either started Islamic finance or issued a sovereign sukuk, of course the only one in Europe at the moment is Luxembourg, besides the UK, I think that's an important sort of theme to bear in mind. The idea is not to put Islamic finance ahead of conventional finance, but to make sure that it's treated equally and on the same playing field. Now, there are going to be different reasons why a government might want to issue a sukuk. I mean, for example, there's nothing to do with the EU. A few years ago, I was in Nigeria. Central Bank was hosting a conference there, and they called Islamic finance non-interest banking. Because one of the reasons there was they felt that a large percentage of the population was excluded from the banking system because it's conventional. So there are various sort of reasons why a government might want to promote Islamic finance, and there are various reasons why a government might want to issue a sukuk. But as I said, the UK is really a part of a long-standing process. So what I thought I'd do is very briefly go through the things that were done to lead to the sukuk, look at where we stood in 2013, I'll very briefly sort of look at some of the structural issues of the Sukuk, and then project things forward in terms of not just the UK but the EU as well. Well, the initial impetus, I think most people would agree in the UK, a lot is down to the previous Governor of the Bank of England, Lord Eddie George. And I'm sure a lot of us had heard him speak when he told the story about one of his neighbours who was one day saying to him that they couldn't get a mortgage to buy a house because it was all conventional. So I think his view was that it was wrong for citizens of this country to be excluded from the banking system. And of course, the structural barriers which this country, and I think most countries, will face, especially in the West, where it's highly regulated and the laws are very sophisticated and highly structured. And the main structural barriers there were really to do with tax and regulatory issues. Again, the approach in this country was to not say that we're making these changes to promote Islamic banking, but the terminology was alternative finance. In theory, if you can fit within the tax changes that were made, and it's not Islamic financing, then you'll get the benefit of those tax changes. So the tax changes were, again, this level playing field approach, which I think other EU countries, if they're considering going down this route, that is the key fundamental principle. And again, there are various changes made over a series of years to address the various tax issues, the old stamp duty, double taxation on transfers of property. Other changes were made to encourage different types of Islamic finance products. And in terms of the Sukuk, because 2009, there were changes made to come up with a new type of bond, the investment bond, which was a Sukuk. And again, the approach there was, we recognize this as a different type of bond. If you fit within those criteria as a Sukuk, then you'll be treated as if you were a conventional bond, i.e. you'll be treated fairly and equally. Now the other issue is the regulatory changes, and again this is an issue and a continuing issue because at the end of my talk I'll just touch briefly on some of the EU issues that are arising. And of course the main issue to begin with was that a Sukuk, on the face of it, is like a collective investment scheme, a bit like a fund. Of course the big problem with that was if it fell within that category, then it would have a major impact on what you could or could not include in a prospectus and other consequential issues as well. So again, as part of this ongoing attempt to encourage Islamic finance, there was a new classification, alternative finance investment bond. And again, that then created various criteria which said basically, if you fall within these parameters, then you'll be in essence treated as if on the same basis as a conventional bond. You won't be discriminated against. But again, as I said, that's really not the end of the process. There is an ongoing process because we're part of the EU. So again, for other countries in the EU that are looking to promote Sukuk, the EU changes and proposed changes in relation to the regulations that affect bonds is going to be something that you'll have to consider. Right, well, 2013, of course, Islamic finance really has stalled somewhat, really, in the UK. And there were some people criticising the fact that this had happened. But, I mean, the reality, of course, was the credit crunch, the collapse in the financial system. The reality is this government and other governments had bigger issues to consider and be worried about. So it wasn't a surprise, in my view, that actually nothing substantive had happened really since 2009. But again, this coalition government continued the strategy that the previous government had adopted in wanting to try and encourage Islamic finance. So one of the things they did to try and reinvigorate this was to set up the Islamic Finance Task Force, which I had the privilege to be a member. The things that they were trying to focus on was, of course, the WIF, the WIF conference that was held last year, which I think for most of us in the Islamic finance sector thought was a success. There were also issues about how could infrastructure projects be undertaken using Islamic finance. Now, the capital market and regulatory issues were of particular interest because I remember one of the meetings that we had, I think it was about June of 2013. I raised the point, I think Stella Cox, I'm not sure whether she's here now, we were raising the issue with Baroness Vasi and the other ministers present that the key issue was that the government hadn't issued a sukuk. So regardless of what announcements one might make at the WIF summit about other initiatives, whether they be education or whatever, I think most people were hoping and expecting there to be a sukuk issuance. This led to various sort of discussions, and I have to say, City UK, I think, who were sponsoring or one of the co-sponsors of this conference, were very helpful. We liaised with them, and they produced a report which various of their members helped write, talking about what were the benefits of doing a sukuk. And it's quite interesting because, and I think this is probably one of the areas that was addressed in the sukuk that was eventually issued, was what was this value for money issue? Because if you remember, the usual response from government ministers when they were asked, well, why haven't you done a sukuk, was, well, we don't think it's value for money. But no one actually really understood what that was. And it's quite interesting, the discussions that we had with the Treasury and other officials. Actually, it was a wider concept than just what was the pricing. I mean, there were concerns and issues about, well, would it be taken up? And I think most people were very strong of the view that it would be taken up and there would be no risk. Issues like, well, if we do a sukuk, would it mean that the government might be forced to issue other types of bonds? What would be the transactional costs? Would it be more expensive than a conventional? So these were the type of issues that actually needed to be addressed, and I think they were addressed. And clearly there was a lot of momentum building up. I think Baroness Vasi was very supportive. I know that there were other initiatives direct to number 10. But it was clear by the weeks leading up to the WIF summit that the government actually really wanted to do this, and they wanted to find a way of doing it. And that led to the announcement, the Prime Minister's announcement, that they were looking into the feasibility of doing the sukuk. And so the sukuk was issued. Now, I don't propose to sort of flog through the structure. Bilal was involved in it, so if you've got any tricky questions, go and ask him. But the overall structure, which is a structure that, to be honest, I think is now being used by most sovereign sukuk issuers, is the Ijara structure. This one involved a head lease and a sublease back to the Department of Communities and Local Government. One of the general issues with all these type of sukuk is that in this case the landlord in the top left hand corner could be argued to be the same as the sukuk issuer, in the sense that the sukuk issuer is owned by the Treasury. And I know, from many years ago there were discussions about, well, could the lessor, the seller, be the same as the was a sublessee. My understanding, and I'm sure Bilal would correct me if I'm wrong, is that one of the Sharia arguments for this is that under the Sharia, the treasury of a government is regarded as being like a separate entity. So that's, you can get around some of the Sharia issues. But the structure basically is what we all see with most ijara financings. In this case, it's a head lease and a sublease. You have the purchase undertaking, the sale undertaking, and the service agency agreement. I suppose the interesting point was in the bottom right-hand corner, the procurement undertaking. Because the sukuk issuer is a PLC, but of course, again, using the level playing field concept, if you've got a gilt, you've got a direct claim against the government. So here, the HMT entered into the procurement undertaking to, in effect, mean that the holder of a sukuk would have a claim against HMT, which would be the same outcome as with a gilt. Now, I think it was interesting that, out of those discussions I mentioned about the value for money and the extent that the government could borrow or finance itself through an Islamic finance structure, what were the restrictions or what was the ability of HMT to actually finance itself through an Islamic finance sukuk? And again, that's an issue I would say would apply to all EU countries that are looking at this. And there were changes, the government alternative finance arrangement regulations, which were basically regulations, if you go through them, which follow the structure in that diagram, which talk about an interest in land being transferred, and then a lease and a lease back. So I think these regulations were there clearly setting out the authority and power of the Treasury to go ahead and acquire financing through this method. And my guess is that most EU countries would have to look at some type of statutory or regulatory changes to allow them to do this. I think, for example, Turkey, as an example, had to pass a whole series of laws to give that type of authority to its finance department. So there are, interesting, these regulations allow the HMT to use this type of financing if it ticks various boxes. And one of them, for example, is promoting sound monetary conditions in the UK. And as I've said here, in the last bullet point, there's the first little A is a must. But interestingly, B is whether these finance arrangements will be the effect that those will have on the general availability of alternative finance arrangements in the United Kingdom. Now, in my view, what that is driving at, based upon what we were talking about in the task force, was that the local Islamic banks here have a problem in that they need sterling-denominated sukuk to meet their various liquidity requirements. So this, is one of those value for money points, I think, that has now been expressed through these regulatory empowerment changes. Okay, just a few slides here. Well, why was the sukuk actually issued? Which goes back to the point I was making earlier. If you are a EU government, or in fact any government that doesn't do Islamic financing, well, why do you issue a sukuk? Now, the UK government didn't have to issue a sukuk to fund itself. I mean, the conventional gilts market is more than enough. But there were reasons, and it's part of this overall picture which you have to consider the sukuk issuance against. I mean, UK financial institutions desperately needed sterling-denominated sukuk. And in fact, I think they still do, because the size of the issue, 200 million, was really predicated on a no-risk take-up, because I think if the only banks, if nobody took up the sukuk issue, other than the UK Islamic financial institutions, there would be at least 200 million taken up. So for those people that were worried within the Treasury and other departments, we're not sure whether people will buy this. Of course, everybody connected with the Islamic finance industry were telling them that it's going to be oversubscribed. There was a definite take-up from the local banks. And of course, I think it was 2.3 billion was taken up in the end. Again, there were other reasons. Just issuing that sukuk also sent out a message, and an important message, that the UK government is committed to Islamic finance in all forms. Because at the WIF, we were talking about things like education in the Islamic finance sector. And so the sukuk, yes, it was there for a financial reason, but it's also sending out a very strong message that the UK is totally behind the development of Islamic finance in all areas. Now, I know there's been discussions about future issues. My understanding is at the moment there are none planned. In my view, that doesn't mean that the government is being negative about it. It's sent out a message that it is possible to issue a sukuk, and now it wants other people to go ahead and issue sukuk, such as corporates. So looking ahead, as I said, the sukuk is really just one part of the of this overall journey that the various governments have been on, and the UK Islamic financial institutions needed this sukuk, and it is critical because of these various Basel III requirements. Clearly, it's not enough sukuk at the moment, and while UK Islamic financial banks can get, say, dollar-denominated sukuk, there is a currency cost for them in doing that. Again, that, in their view, and I think it's correct, means they're not on a total level playing field. It's interesting, there's a very recent Bank of England announcement, which I'm sure many of us have seen, that they're going to be looking, but not until the end of 2015, at some Sharia-compliant facility. It's a pity it's not a little bit earlier, but clearly it's an issue that the local banks are going to face. So again, in a wider EU context, if an EU country has or wants to promote Islamic finance by the setting up of Islamic banks, sukuk is important for them, but again, a local currency sukuk is probably something that they're going to have to look at. But again, a sukuk will only come once you put all these other building blocks in place. So, the corporate sukuk, the government has made various announcements that it hopes that by issuing a sukuk, it sent out a message that it can be done in the UK, and would like corporates to now consider issuing a sukuk. Again, I think that's not necessarily a given. I mean, you've got to persuade a finance director of a company, why should they do a sukuk? There's a lot of people still don't understand the mechanics. So it's a work in progress on that. Now, in terms of infrastructure, which is sort of tied into the corporate expectation, the Treasury recently, a few months ago, held a meeting to try and on infrastructure, and hopefully they'll hold other meetings, and it's not a secret. I think if people want to come along, they can contact the Treasury to try and explore how infrastructure projects can be financed through Islamic finance techniques, and in particular sukuk. Of course, there are differences as to what is meant by infrastructure. If you ask a minister, they're really talking about big things like airports or train tracks or whatever. But infrastructure can also mean things like social housing. I think Gatehouse and Sigma sort of recently did a joint venture for housing. So there is a possibility for local authorities, and I know there are discussions with various local authorities who are quite interested now. Perhaps we can raise finance through sukuk for some of our local authority projects. Again, other initiatives that the government has recently announced is is the UK Export Finance Sharia compliant support. We've also seen developments in the UK with Sharia compliant insurance, and Cobalt was recently set up last year. Student loans has been a consultation paper. I think they got 19,000 responses to come up with a Sharia compliant student loan facility. And generally the education sector, various universities and training colleges are trying to come up with more offerings which fits in with the general UK education offering. Now, just a few words, because coming to the end of the presentation, but what are potential clouds on the horizon in terms of Sukuk? Well, we have the EU directives and regulations. I'm giving you the example there about the recent directive. The trouble is the way that that's been drafted, could possibly catch a Sukuk in the sense that it's very similar to a collective investment scheme. The FCA at the moment has come out through its perimeter guidance manual and has said if it meets various sort of criteria, it wouldn't regard as Sukuk as falling in that. But it's interesting, the wording that they've used is pending future clarification at the EU level. So again, both in the UK and in the wider EU, the effect of this directive and its implementation, I think, ought to be very carefully watched by the Islamic finance sector, because we don't want that directive and the way it's interpreted to actually hold back future Sukuk issue, whether at a sovereign level or at Sukuk level. So in summary, the UK has done the Sukuk because it's part of an overall strategy. It wants to be the leading Western hub for Islamic finance. So it sent out another very strong message by issuing the Sukuk that it is, in its view. Luxembourg has issued the Sukuk, and I suppose it's also sending out a message that it should be considered a leading hub. It's also been done to promote the domestic Islamic finance sector, and just this continuation of this very long history and tradition of the UK and the city in particular, that it's really always has been in the forefront of new financing techniques. So that's the end of the presentation, and thank you very much for listening to me.